Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your hosts Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, traders and investors. Welcome to this Wednesday edition of Benzinga's Pre-Market Prep. I'm Spencer Israel here with Joel Elconin and Dennis Dick. On this show today, we're going to keep talking about AMD is running oil. Going to talk about that after the day it had yesterday. We're not going to talk about Uber. That won't have any market implications, so don't worry. We're not going to talk about that. I promise. We're just going to hit on the movers of the morning. A lot of action in ratings lane as well, and some earnings actually. FedEx, Red Hat, Lazy Boy, and Adobe, and a few others today. Our guest today is at 8:35. That's Mish Schneider. She is the Director of Trading Education and Research at Market Gauge. Joel, how's it going in the S&Ps this morning?
Good, Spencer. You sound real chipper this morning. Did you get a good night's sleep or something?
Yeah. Actually, I hit snooze 6 times today.
Okay. All right. S&P futures are in the red here by 475. Couldn't hold that closing print of 37.50 and still $5 away from there. So that's the level of the day on the upside. On the downside, nothing sticking out to me here to 28.75. That's the current low. That doesn't mean it won't hold up as the low of the day. But if we take that out, we're in danger of trading in the lower 24.20 handle. 20 and a quarter was your low from Friday. Moving on to the daily crude, trading up 7 cents here, and maybe we can have the chat answer for us. Is 43 the whole number that's going to hold? I'll just give you the low from yesterday, 42.94. Today's low, the current low, 43.03. And we do have a number coming up at 10:30 this morning as well. Gold in the green by $2, still under $12.50, and silver has lost the 16.50 area, trading down almost 3 cents at 16.39. Dennis, how are you doing on this beautiful Wednesday morning?
Not bad. Still fighting a little bit of a cold, but starting to get over it there. These summer colds, Joel, they're tough.
Yeah, Des, I got to congratulate you. You've made a couple good calls lately. I don't know if they've translated into your pocketbook, but I want to.
Not usually. I usually don't actually trade a lot of stocks that, well, I do trade sometimes after the stocks I'm talking about on the show. I just forget. I talk about a good idea and then I forget to do it.
Regeneron?
I know. I looked at it yesterday too. We talked about it on the show in the pre-market. It was trading down $5 or $6, and I just cited the day before you'd saw a sympathy stock trade significantly down, and it came back, and I was like, Regeneron could do the same thing. Not only did Regeneron come back from being down 10 points, it ended up 20.
You know what? It's just these stocks are impossible to trade. $500 stocks. So
Slippage.
The slippage
5-point spreads. I mean, right now the pre-market Regeneron, and not that you're going to trade a $500 stock in the pre-market, but it's got a 17-point spread right now, 494 to 511. It's just thin.
What is it during the day?
It's off in $1 or $2, sometimes even more. And on that opening bar, sometimes it can be $2 or $3. So you got huge slippage. I mean, it's very difficult to get. You'll get filled, on your 494 bid when it's 494 offer. But sometimes in the best bid's down to 492, so you got like a 2-point spread you're paying. So it's tricky. I mean, back in the day, before everybody can do this quote matching, this is something else, we don't talk a lot about on the show. It's market structure stuff, but it's just difficult. Bottom line is in this market structure, it's difficult to get filled on your bid and filled on your offer without it blowing right through you. So it's very hard to buy the low of the day or sell the high of the day in the bottom line. I mean, if it's chopping around, you'll eventually get filled. But it's just tricky to get filled on your bids, especially in that opening bracket.
And one stock that you cannot complain about the liquidity, and you've made a bold call, or not bold, but you've been just watching this AMD, and it's traded almost 1 million shares this morning.
Is this trying to make me feel bad, day, Joel? All of these stocks that I wanted to buy, and then they're going, or all the stocks I decided not, that I actually decided I was going to buy, but I just didn't execute. You're bringing them all up here this morning. So AMD is one I talked about for the last month. You know that on the show. I've been wanting to buy it under $11. I probably had a dozen chances to do it. Now I look at it 13.22 and kind of want to throw up in my mouth a little bit.
All right. Well, don't do that while we're on the show. But let's get to the morning news and the morning movers.
Some major earnings reports here. Let's talk about those first. FedEx here had earnings last night. Stock rallied significantly there. And here's another one. I was looking at this and I was just analyzing it, and it looked like it wanted to give it back. It rallied up and it started to leak, and lo and behold, it gives it back here. And FedEx, I think, has done that before too. So you got to watch some of these earnings reports. When they pop up and then they start to simmer, sometimes that's the time to go. And you can look at FedEx here. Pretty decent report. Spencer, give us the details, and then we'll analyze the technicals.
Q4 adjusted EPS of $4.25 versus $3.88. They beat that estimate. Sales of $15.7 versus $15.56 billion. They beat that as well. They're also coming in with some fiscal year 18 EPS guidance that is a little bit lower than the estimate. They missed it by about 35 cents on the high end of the range.
This stock traded up significantly, actually to a new all-time high there last night after hours. What'd you see as a high, Joel?
214.89.
Wow. So up over $5, and then started to leak. And it was hanging out last night, and UPS was trading up. I actually put on the FedEx UPS spread there, so I got a little FedEx UPS going on. So it's actually working quite well too. But I wish I would have just shorted UPS naked up there, because UPS actually was trading at 111 last night. And I was thinking, FedEx, I just don't see this. It looked like it wanted to leak, and then UPS was trading up quite a bit. Actually, at one point in time, UPS was trading up more than FedEx, on a percentage basis, which seems ridiculous to me when the sympathy stock is up more than the other stock. There always seems to be an opportunity. So here you are. Both of them are giving it all back, and now FedEx trading significantly in the red.
Let's see here. So if you get a pop, you're trading down $1.46 at 207.50. I'll call 209. That was the area of the last 2 days low. So if you get a shot there, a gap fill, could see that as some potential resistance. Coming back on the downside here, we have already smashed yesterday's low. The pre-market low, and just sitting here at 207.50. Let's see if I can find a level for you here. Under 207.50. Look out, folks. There's not much until your double bottom area at 205. So 205, 209, those are your early levels in FDX.
Spencer, I might have to have you go digging just right now. Foot Locker is starting to get hit hard here, assuming something came out at 8 o'clock, because the stock was trading just slightly down. Now it's down $1.50. So always difficult when you're on a live radio show to follow all the news, because we obviously can't be listening to other news or reading our pro as well as we can, when we're not doing a live radio show. So Spencer, if you don't mind digging, FL starting to fall here. Chad, if you've got the story, something broke, it looks like at 8 o'clock, because that's when it started the bottom started to fall out of Foot Locker.
Well, could this have something to do with Nike selling on Amazon?
Oh, good call. That could actually be the case. Nike actually is up significantly here, so that could be the case. I think it was Goldman that was saying, in a note this morning, that Nike currently, guess they don't sell directly on Amazon, but they were saying that might possibly change, and you can see Nike catching a bid. So maybe that is the news, and Foot Locker getting hit on this.
Spike down just to 48.48. About just 7,000 shares just traded, not getting much of a bounce. Just looking at the daily chart here.
We're back to Foot Locker, by the way.
Yeah, I'm sorry. Just going to the daily chart, you had that drop, right, after earnings. And it's okay to get long at 60 here, right? Little consolidation, and then boom, another move lower. We are now trading at levels in Foot Locker. I got a number for you on the downside, Dennis. Back in July and August of 2014, one low at 47.11, the other 47.50. We'll split that 47.30, Dennis. If it gets down there, cover your short.
Spencer, I think you're right. I think this is the Amazon effect, because check this out. Nike up $1, trading up 1.84%, so they're the beneficiary here. Seems like whoever's not being benefited by Amazon is getting hit. Foot Locker is down. FL. We can look at Dick's Sporting Goods, DKS. That's trading down $1 in the pre-market. You can look at Finish Line, FINL. That's offered down in the pre-market, not trading down yet. Another one, Hibet Sports, HIBB. That's down 1.8% in the pre-market. So I think you're right. I think, it's an Amazon effect here again. I mean, is this market just, trade off Amazon and that's it now?
Did you see what Downward Dog said in the chat earlier that Amazon's selling oil online now? And that's the reason for this.
I'll knock all the crude stocks down.
Exactly.
Amazon's going to start drilling. Yeah, Amazon's they're gonna be cheaper than everybody else. They're actually gonna put the Saudis out of business.
Yeah, that's why they replaced the prince. They're trying to figure out or the heir how to compete with Amazon.
They're gonna make Bezos the new prince.
All right. So
we really digressed ourselves now and starting bad rumors here, Joe. All right, moving on from Amazon talk, back to our earnings parade here. We got two big movers here this morning in the up direction. Red Hat up 10%. RHT. Spencer, how'd they do?
Yep, Red Hat reported Q1 adjusted EPS yesterday after the bell of 56 cents. That beat by 3 cents. Sales of 677 million versus 647 million, so they beat that number as well. Their Q2 guidance EPS coming in higher than the estimate by 2 cents. Sales guidance coming in line with, actually higher than the estimate by about $20 million on the low end of the range. And the fiscal year 18 EPS coming in lower. The fiscal year 18 sales is lower as well, but good Q2 guidance.
Red Hat, those big psychological hole numbers, Joel. I was actually out there last night, and I was like, $100 gonna be there, and I actually threw out an offer. I threw out an offer in the upper 99s, and then I pulled it, and you know what? I would have got executed. I think, what is the high?
You have the pre-market high in Red Hat here. Yeah, I'm looking 99.40.
99.95.
I got 95.
I thought I saw 95 too, and you know why I'm kicking myself is because that's where I was. It was like right around 99, 99.
You're right.
I probably wouldn't have got filled. I probably would have just got up to the high and just kissed my order and probably wouldn't have filled it. But that being said, well, I think it's only down $1 from there, so it's not that much money. I'm leaving it on the table.
Now, this is an interesting chart here. You know how I just love to pick tops and stuff, but look at the way this thing's hanging up here. It hit that 99.85, and you haven't traded below 98.62. So someone is propping it up here at these elevated levels. So I'm not, maybe 100 is a psychological. I'm not looking for any downside action in this until you take out 98.62, but this is interesting, holding up there right at the 9-point gain, and that far exceeds the former all-time high for Red Hat. That was at 92.49.
Adobe, ADBE, also reporting earnings last night. This stock also making new highs. Spencer?
I was on mute. I muted myself there. Q2 adjusted EPS $1.02 versus 95-cent estimate. Nice beat on that. Sales of 1.77 versus 1.73 billion dollars. So good Q2 there for Adobe.
And the stock trading up 5 points here in the pre-market. So nice pop here for ADBE.
We've taken out the former all-time high, which was 144.34. I'll just give you your pre-market high. 147.89. As of right now, looks like someone's protecting the 148 level. So I think in this one, more of a chance that you've seen the high for the session than the Red Hat. Coming back on the downside, you've had an area you've been holding since the report. So under 145.5, look out, Nelly. There's a lot of room below.
Lazy boy. They were leaning the wrong way on this one. They hit it yesterday ahead of the report, and the stock is actually getting a pop. Good earnings report.
57 cents versus 46 cents. Sales of 412.7 versus 400.25 million dollars. So great. Our earnings there for Lazy Boy, also reporting a $6 million share buyback.
Okay. So big hole numbers here again, Joel. I mean, $30. It sounds just an enormous number. Well, I haven't even looked. What's the after hours high?
Right here, right now, 29.65. That's the high. You're holding right up there. 30 is a psychological number. bunch of highs at 29. This was back in early May. So I don't know, maybe move that whole number up to 30, but could be some downside if you can't hold 29. And Dennis, we're not going to tell your story today, but you know what? Next earnings report for Lazy Boy, I'm going to bring my buddy Chucky Knabush on, whose grandfather started the company.
Oh, that would be good. I can tell him how my buddy got stuck in the Lazy Boy and had to get the jaws of life to rescue him.
Yep, the Monroe, Michigan company, my hometown.
Lazy Boy. Okay, a couple other ones, smaller ones to report. Winnebago. This is, I guess they're the beneficiary of lower oil prices here because WGO, really in the last couple of years since oil has been getting whacked, has actually done really well. I mean, really, 2016, the bottom was $15. This thing actually got up to 39. It's pulled off those highs, but it's $30 still. So you're up. You basically doubled here in the last year and a half since oil's been hit pretty hard. So I guess there's a inverse correlation there between Winnebago and oil prices, and WGO benefiting from something here because good earnings report.
Well, I mean, I guess not, I don't know. 61 cents versus 72 cents was the estimate for the EPS.
Well, that doesn't sound good.
Sales are 476 versus 441 million dollars. So good sales, but they missed on the EPS. So a mixed report, I would say.
Mixed report. Well, for whatever reason, they wanted to buy it, and I guess sometimes these stocks can do what they want to do, and in this case, it seemed to want to go higher. Trading up 4% through the psychological $30 resistance level. I will just warn you, 30 is resistance until it's broken in the regular session. So just because it trades a few thousand shares above it in the pre-market doesn't necessarily mean it's breaking out. So we got to see, what happens during the regular session if they do indeed come in and start buying this thing up through 30. But right now it's hanging out just above $30, looking to break out here today.
All right, pre-market high is 30.85, and you're just 40 cents under that. If you go back to your daily charts, you had that one quick top at 30.58. So split that 30.70, I'd say through 30.70, continued upside. You can look at 31 as a whole number. Trading up $1.15 on a good report. I mean, you don't want to see it. Well, it's a ways from going red on the day. In order to fill the gap, all you have to do is go down to 29.91. That was yesterday's high. So support at 30, minor resistance at 30.70.
And one other one just to talk about KMX, CarMax, and we've pretty much covered all of them. It's trading up 7% here in the pre-market. This is a retailer that's actually doing well. And they were leaning the wrong way on this one here, too. No insider trading here. Stock got hit yesterday hard ahead of the report, and stock getting a pop.
Q1 EPS $1.13 versus 98-cent estimate. Sales of $4.54 billion versus $4.46 billion. So they beat on the sales, they beat on the EPS. Used car comps up 8.2%.
Boom, up 7.5%. What are you doing with this one, Joel?
Well, someone's making a stand at 64. Whatever you're willing to buy at 64, they're willing to sell here. That's here at 818, so things can change in the regular session. Looking at the daily charts, you have a 64.33 high. So I don't know. You clear 64, you take out the resistance. I think you still see some sellers all the way up to 64.87. That was your May 30th high.
In the chat here, RCA is talking about Intel getting downgraded at Bank of America. So let's go over to the ratings changes. There's about 4 significant ones that I've got written down. This is quite a few actually, but just 4 main ones I want to talk about. Intel is one of them. It is trading down 1.5% here in the pre-market on the downgrade from Bank of America. And with all the love and AMD, NVIDIA, and the other chips have been getting, Intel really hasn't participated. Now it's just kind of been hanging out here. Got hit a little bit yesterday. Now it's getting hit again.
I don't know about this one. This monthly here, Spencer, we'll go a little bit longer term and look at the monthlies here.
Doesn't look good.
No, and you've been hanging in here. You've been holding 35 for the longest time here. That's been support going all the way back until February of this year. And now you're breaking it on, an overnight session. I think you're still, maybe not today. I mean, we are trading at 34.40. I think you get another shot at this thing closer to 35. 34.84 was yesterday's low. Yeah, I don't know if you're going to see it today, but when you have support holding since February and then it breaks it down, man, if it kisses it, comes back up, I think there'll be a ton of resistance there, but things are not looking good for Intel here long term.
Jumping over to other ratings land, VMware getting upgraded at Stifel here this morning, and they are it is trading up $1 here in the pre-market. So VMW catching an upgrade at Stifel.
$89, trying to take out that level. You call it Stifel, I call it Stifle. 3 highs there, right at 89 even, right trading at 89.22. Holds at 89, folks. Room on the upside all the way up to 91.13. That was your high on May 9th, coming hard off earnings report. They hit it. We also could do a little 50% retracement. We went from 98 down to, let's call it 86. That's 12.692. I'm not touching this one on the short side, Dennis. I think there's a lot of air in here if they can hold this 89.
Stock that's been an absolute monster too. PayPal. I had this one in my investment account for a long time. Sold it back at 40. I thought it was getting a little bit pricey at 40. Apparently, I was wrong because it's now $53. PYPL getting upgraded Pacific Crest.
You got a nice pop up here on the initial headline up to 53.42. Not quite the all-time high. The all-time high in the issue is 55.14. I don't know. This is look at support is this one at the 53 area, 53.23. So you're still filling a gap here. Not liking this one as much on the upside as the VMware.
And then last one I had on my list, Target. It's a little bit of a late downgrade, but they're getting downgraded at Citigroup here, assuming this is something to do probably with the Amazon purchase of Whole Foods. The Target chart, we got the big whoosh, and we came back, almost to probably over a 50% retracement. Now a couple of days where we've been sliding here again. It's got to hold 50. I mean, it starts cutting under 50. You start to get concerned that we're probably going to see the low of the move again, which was down to 48.56.
Trading down here in the pre-market, but just kind of holding in here. You got a number to key off here. That was yesterday's low at 50.64. So if it holds that, has a chance to maybe sneak into the 51 handle. 51.71 was yesterday, or the 2-day close. The low close of the move so far, even that day we went down to 48.56. Low of the close, lowest close of the move here, 50.91.
And just to sum up, there's about 50 ratings changes today, so there's quite a few here. But there's, there's a note here from Morgan Stanley on the oils, and they are downgrading just a pile of them. They're downgrading Schlumberger. Let me just fly through them. Schlumberger. They're downgrading ICD, Neighbors, NBR, Precision Drilling, which is Canadian, PDS. They're downgrading OIS, they're downgrading OII, HPFI. There was also another note, Spencer, I mentioned this morning. I'm already forgetting.
Seaport Global downgrading Apache, Bill Barrett, SRC Energy, Devon Energy, Basic Energy, Now, DNOW, Gastar, GST. So they're also just taking aim.
Just a ton of downgrades in your oil and energy sector here today. Is this late to the party here? I mean, oil's been going straight down. All these stocks have already been massacred. I don't know. This seems really late to the party, doesn't it, Joel?
Yeah, I mean, these stocks have been under pressure here. I don't know. I really am not that interested in hitting these stocks off these downgrades after they've been beat up so far, especially because, I don't know, I'm just looking at this oil here at 43.66 with that potential double bottom there, and that 1030 number coming up. Just seems like, it just makes all these crazy moves. For some reason, it just seems like it, just blow some shorts up, go up to 45 or 45 and a half. So not jumping on these late downgrades here in the oil services sector.
I'll tell you, they're still sliding. Foot Locker slid actually was down 5%. It's come back from the lows here now, but we're still seeing the finish line now is down almost 5%, trading at 12.40. So Nike continues, it's about the same price, up 1.7%, but Amazon effect still flying here. And affecting a lot of your shoe retailers here this morning.
We got the spoos on the rebound here, Dennis.
They're trying, right now.
Yeah, did we have? Well, I can't say an 8:30 number here because it's only 8:25 here in the Motor City, but we've coming back here. We are only down now $1.25. Buy the dippers out here early, 37.25. That's your pre-market high. That's one tick below yesterday's close of 24.37.50.
Another stock I just wanted to mention, CA. You'll see that one trading up 11% here this morning. If you're wondering why, it's because there was a Bloomberg rumor that came out last night that said BMC Software, which was taken private a few years ago, is basically sniffing around here and talking about acquiring CA and taking it private as well. So Evercore, I know, came out this morning saying the price could be anywhere from 34 to 42 bucks. So here you are trading 35. So obviously, people speculating here that where there's smoke, there might be fire.
What a boring stock here. You can look at the monthly chart here, going back to the middle of 2003, and you've had a consolidation. You did trade down to 21 during the financial crisis here, but long consolidation period here. The top of that consolidation has been 35 here. Maybe it's time to go. I'm not shorting this thing, even though it's up 352. Of course, you want to see
short on a Bloomberg rumor.
Yeah, but look at that monthly there, Dennis. Is this a sleeping giant here? I mean, the all-time high back during the first the tech bubble was 70.63 here. So, interesting. Computer Associates perhaps breaking out of its slumber.
Just a couple other ones I wanted to cover from yesterday there, and what I was looking here is GE. Interesting chart stock.
Oh man.
Yeah, the stock had the big pop on what? I don't even remember what the news was. What was the news? It was ridiculous that day, anyways.
I know. Immalt. Yeah, Immalt.
Yeah, the CEO.
Yeah.
I should have remembered that actually. Immelt's stepping down and going to get the new CEO, but it gets the big pop from 28 to 29.50. How many times do we see a new CEO come in, and when the dust settles a week or two later, the stock just gives back the gains? A lot of times. So, and it's interesting setup here because Whirlpool is actually they're announcing their new CEO or a new CEO too, aren't they, Spencer?
Yes, they are.
Yes, they are.
Trading lesson here in GE. I bought some puts on this thing after that pop, and I was thinking that it's going to at least come down to 28 and fill the gap, and never really took much heat on them, but the market, just kept on watching the SPOOs go up, the SPOOs go up, the SPOOs go up, and I'm like, okay, all right, this is going to pull GE up. I covered them, and then I was thinking, oh, how smart I was over the weekend because Barron's did a positive article on it. Boom, they stuffed Barron's right at 29, and here we are. We need to get down to fill the gap here.
It looks like it's gonna fill it.
I know. That's exactly 27.82. You hit 28.08 yesterday, so. Man, oh man, don't let the market, influence what you do in every stock because proven wrong here once again at GE trying to fill the gap.
Yeah. Just jumping back over to the earnings parade, which we're going to get one big one tonight. I just wanted to preview it quickly. Oracle is going to report here after the bell. Spencer, do you got the estimates there? Maybe you can just jump and find the estimates for Oracle, and we'll just do a quick technical here. But I'll tell you, just from my experience here, Oracle is a stock that seems to run up always ahead of the reports. I mean, it did it last time, and then it did gap up and continue to go. So it's not necessarily fading the run up, but I'm just
The estimate, 78 cents is what we're looking for the EPS, and $10.45 billion is what we're looking for.
Yeah, there's your numbers, estimates for Oracle after the bell. It's had the run up here again. Like, there's a play here, just buying Oracle. I'm just going to go back further on the weeklies and continue to look here because it just seems like from my memory here, it seems like every time Oracle, before it reports, it runs up for a week or two before. And here we are, we're up 1, 2, 3, 4 days in a row here again, heading into the Oracle numbers tonight. We're up here again this morning, trading up significantly, I'll say, up 30 cents, which is a big move for Oracle. It's usually kind of stodgy old tech stock, but man, it's been moving here last week.
If you would have held your stock since the tech bubble, when the stock hit 46.47,
is that where it was in the tech bubble?
Yeah. Yep.
It was $46 back in the year 2000. So 17 years later, you got your money back.
You did. You did.
This goes to show you, and we've talked about this before, and some stocks never did come back, but it just goes to show you that when you're buying stocks at ridiculously lofty prices, I can remember the Oracle PE back then was well over 50. It's sometimes, a company can do really well because Oracle's grown the earnings a hell of a lot in the last 17 years. The company itself has performed actually fairly well in the last 17 years, but just the valuations got ridiculous in 1999 and 2000. And the price and obviously needed to fall to catch up with where the company really, should be valued. We said the same thing about Walmart back then when Walmart had a PE of 45. I mean, that was a bubble. You compare it to now, and people say, oh, it's too pricey, everything's too pricey. It's nothing compared to the way it was in the year 2000, 2001 when they were buying, when they were paying billions of dollars for companies that were the size of a 7-Eleven. So, it's a complete different ball game. So that was a bubble. Is this a bubble? You could say it's lofty, it's pricey. I would not call this current market a bubble. I call it relentlessly strong, but it's nothing like it was before. Remember, back, you'd see Amazon up 20% one day, then down 20% the next day, then up 20% on no news. That was, the tech bubble. Stocks were just all over the place. And, they ran up for years and years, and then 2000, the bubble burst, and they just went straight down. And we went from NASDAQ 5,000 all the way down to a NASDAQ 1,100. So you had an 80%, basic crash over the course of a year in the price of all those stocks. And it's taken 17 years for some of them to come back. And some of them never did come back. And Oracle here, which was one of the darlings in the year 2000, 17 years later, you get your money back.
And Dennis, 7-Eleven has over 56,000 stores. So they're not
7-Eleven the company, a 7-Eleven store.
A single one. Okay.
You had okay.
Yeah.
So how many stores do they have?
According to Google, just now 56,600.
So, and they were valuing each 7-Eleven store basically at $1 billion. Is what I'm saying. A company the size of one 7-Eleven store. So so multiply that out. But that's that. So just to clarify my argument there, I wasn't saying the franchise. I was saying one store.
No,
I knew that. Crazy back then.
I knew that. I was just messing with you.
I think didn't Merrick do an article on this and went back there was pets.com and there was toys.com and these things.
Everything.com. If you put .com, you know who the biggest beneficiary of the tech bubble? One of them, Mark Cuban. What did he have? He just came out with that
He had broadcast.com.
Broadcast.com. He threw out something.com. Billionaire. And he sold. But you know what? Mark Cuban, genius, sold out, got out. Sold his company at the right time. So, a lot of people, had $1 billion in paper profits and maybe didn't get out in time or, rode their company right back down. But Cuban sold at the top. So, genius for that move. And that made him. I mean, the tech bubble, you can talk about a lot of people lost a lot of money during the tech bubble, but it made some people too. Mark Cuban, direct beneficiary of the tech bubble.
All right. Before we bring on our first and only guest, Mies Schneider, I want to talk just a little bit about CMG from yesterday, and also some potential play here. Dennis, bad day yesterday, bad news, and here you are. 426 is the 50% retracement of the move from 352.98 up to 498 here. Dennis, what do you think? Are the fundamentals too bad here? Or just maybe make a quick
nothing else just lines up as a problem. And you know how me and you we like the 50% retracement to line up with another level or line up, with something else. And I just see that 425, that low from yesterday kind of in the middle of nowhere.
Yeah.
So even though the 50% is there, there's nothing else there. So that's why it's hard for me to strike. Second thing is, I don't like the valuation of Chipotle. I learned the hard way during the tech bubble. I bought some stocks, at ridiculous valuations, back then too. I was a young punk kid thinking, he couldn't do any wrong. 1999, 2000, I was 22 years old and buying stocks. And I was like, so I learned a little bit the hard way as well. And that's why I become such, follow the Warren Buffett method, which is, I like value. And you see the CMG, it's got a high multiple still, even though it's come significantly down. And, there's obviously still struggling from the whole E. coli thing even a year and a half ago. It hasn't gone away yet. Maybe eventually comes back, but that valuation still scares me away from CMG.
Yeah, maybe at least we'll get it to stop going down here, or have a little double bottom or something. So maybe it will just be a tech play. So, all right, we're gonna have Mish Schneider on. Kyle Dennis had to do a late cancellation on us. So, Spencer, let's take a quick break and bring on Mish.
All right, we'll be right back, folks.
Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by Benzinga Pro. I'm your co-host, Joel Alcana, along with Dennis Dick and Spencer Israel behind the glass. Mish Snyder on the line, Director of Trading Education and Research for Market Gauge. Mish, how you doing on this Wednesday morning?
Doing just well, sweltering a little bit here in the southern part of the state, but otherwise doing great.
And what state are you in?
New Mexico.
New Mexico. Now, I got a question for you that I don't think I've ever asked you before. Being a former member of the NYMEX and being on the floor and a market analyst for Continental Grain, I don't think that we've ever got a good floor story out of you. And coming from the female perspective, do you have one or two floor stories you'd like to share with us?
Well, I think my favorite positive story of being a woman down there was after my first year. I worked for, as you said, Continental Grain and Conti Commodities. After my first year down there, and I was completely inexperienced, I was named Rookie of the Year. So I thought that was a fantastic thing for me, considering that I was one of like maybe 4 women down there that were actually trading at the pits. And I guess here's what I like to tell people. Obviously there were not that many women down there for many reasons, none of the least of which is that physically it was grueling. There were lots of bodies around in the pit. People were jostling one another. And also just from the point of a voice, my voice obviously couldn't project as much as a big man's. But I will say that I found out so much about just how men work with each other, especially in a very tense environment like trading during the day. And the camaraderie was incredible. And the camaraderie around men is very physical. And once I realized that was just the way that men related to each other, I was able to get right in there and be tousled along with everybody else, hugged and shook and sat on and everything. And I loved it. For me, it was great.
That's a good story. All right, well let's move on to the markets here. And one of your expertise is in the commodities markets here. So let's start with the oil market here. And despite the rhetoric from OPEC cutting back on supplies, that surely hasn't happened. Looks like we might have finally found support here at the $43 level. 2 lows right there. Give us your short-term and longer-term outlook for crude oil futures.
Well, interesting. Another floor story, by the way, was when I was down in the crude oil pit and it dropped below. At that point, it was historical $10 a barrel. The news, came and converged down there thinking that oil was going to continue to go. And I was one of the people that was interviewed. And of course, that turned out to be the low. So in terms of public perception, it doesn't really mean very much. And I've been looking at the oil market and particularly, obviously, watching it go straight down along with the entire energy market. And looking at it right now, if you look at the cash, which is just, basically at CL, right now we're inside the bar of yesterday. So obviously, if we got back through, say, $45 a barrel, that would be a very good indication. But if you look at USO, which is what most of us would trade during the day if we were looking to trade the oil fund, it had a gap lower yesterday and it closed at the top end of that gap. So that could look with high volume as an exhaustion gap. If that's the case, then probably if it can hold above, say, $9 on the USO I'm talking about, you might have a really cheap trade here in terms of buying it against yesterday's low. And that's probably what I would be looking for. And if I didn't want to actually get involved in the raw oil, then I'd be looking at some of the energy plays and some of the other, like PBF, for example. PBF is one I actually have on my list. It's PBF Energy Inc. That actually looks a little bit stronger than oil on the chart because it's above the moving averages, the 50 and the 10. So if that thing can clear today, say over 22, it closed yesterday at 21.59, then I think that would also be a more positive indication. So at this point, I would be looking more to be a buyer, but a short-term buyer until the market could really prove itself.
And what about how much attention do you pay to, the Wall Street analyst? Host of downgrades here in the oil services sector. Maybe Johnny-come-lately moves, maybe not. How do you just kind of stick with your technicals, or do you pay attention to these Wall Street analysts?
I never pay attention to these Wall Street analysts. No offense to you, Wall Street analysts. But I find that they're usually late to the party. In fact, if I'm actually in a particular instrument and I hear they've upgraded it, I get nervous because now all of a sudden the attention is being paid to it. So the fact that it's been downgraded doesn't really make any difference to me at all. The only thing that makes difference to me is, like I said, if we're coming near a historical low, if we're seeing some kind of a great chart pattern like an exhaustion gap, it would be an island bottom, so we're actually at its historical low, but it's not. It's been lower. So I think if you use those parameters and you're just patient, forget about what people say because you can find, 20 opinions out there. And it's very hard to sift through who's right and who's wrong. I mean, that's why I really promote people learn about phases and understand what phase something is in so that they can make their own decisions about what to do with their money.
All right. Over the course of the few years we've been interviewing you, or more recently, you've talked about your modern family and how, different categories of stocks. We won't go over all of them this morning, but let's just maybe talk about a couple sectors that might be turning around. And is biotech, is that part of your modern family?
Yes, it is. That's Big Brother. And,
yeah.
Big Brother makes the cut because generally that's where you see the most spec interest come in. If you're seeing a lot of buying in the biotech, that means, that people are feeling a little bit more generous in the market. And of course, yesterday's big move up was noteworthy, particularly since, you look at that in comparison to, say, retail, which is brick and mortar retail, which is, crashing. It makes you wonder how much retail is really impacting the market and what are people looking at. And so I think what biotech represents is this sort of level of, there's still this tremendous amount of faith that this market will hold and continue to go up based on policies that people are waiting for, like tax cuts, deregulation, obviously a health plan, which is definitely going to affect ADBE. And I saw yesterday that so far they're trying to, after years of Trump really trashing the farm prices, now he's talking about possibly reducing the regulations, which would be good for biotech. So, I think at this point, the way I look at the modern family is there is the actual what's going on, and then there's what I'm calling the hologram of what's going on. And so that hologram can be turned any way you want. So yeah, IBB is important to watch because if that continues to go up, it's going to make a hard case for thinking that the market topped out. And then of course you have to watch the Russell 2000 because that I think is the most popular of the modern family in terms of gauging what the U.S. economy is going to do. And right now it's sold off from the highs. It's been not able to break through a big channel top it has on the daily and the monthly. And this morning I can see it's flat. But if it gets back through 140 and continues to go, that's probably a good sign against, say, 137.50, 138.
Mish, Dennis Dick here. Just wanted to know what you thought about the financials here because they've kind of had a little run up about a couple weeks ago, and they've been in a consolidation phase here since really the Fed decision in the last week. I guess, people trying to figure out whether they're going up or down here. What do you think about the financials?
Well, exactly what you said. They're in a consolidation mode. By the way, there's XLF, which is the big banks. And then in the modern family, since we're talking about it, there's KRE, which is the regional bank. So that's the one I like to watch the most. And, that is definitely, formed somewhat of a base over the last few months, tried to bust out of it last week, and is now back underneath some critical areas. So I would say that in terms of the Fed, they're very confusing because they made their sentiment known that right now their biggest focus is on the balance sheet. They want to definitely increase the balance sheet. On the other hand, TLTs soared after they raised the rates. And so there's an element of the market that doesn't believe them. So I think that's why you're seeing this consolidation in the financials, because it seems like that market doesn't really know what is the Fed going to do. It's good for the banks if they raise the rates. And obviously, if there's a fearful indication and people start to flock back into the TLTs, that shows a lack of faith in the Fed being able to raise the rates. And also, obviously, the fact that if the Fed doesn't raise the rates, concern about the economy. So if you wanted to see hard numbers, in KRE, which is the one I would watch in particular, if it can get back, and right now it closed yesterday at 54.35. It's up a little bit here just on the bid offer pre-market. Over 56, I think we're back in biz. If you want to put it into XLF terms, that's already in good shape. That has to take out 24.50.
I want to go back just to the IBB here for a second because I have been pounding the table on this $300 level. And boy, oh boy, you would have gotten smoked binded as a breakout the last few times it's happened. This is a pattern that's been holding here since it broke down, since early 2016. Now I'm looking up, trading another $1.41 here. When you see a technical formation, I'm really not, basing it that much on the technicals. How would you classify that? Yeah, okay, this time it's going. This time it's holding 300 and it's going to 350. What kind of, do you use days? Do you use closes? How would you determine it?
Well, actually, IBB, I think, gave you a better buy signal a while ago when it broke down under the 200. Let's see, when was that? Let me give you the exact date here. It broke down right at the end of May under the 200 and then came back to close above it. And the next day held that high and kept going. I think that was really the indication that IBB was done to the downside. Now, yesterday you had big volume. So what I would say at this point is 300. You're absolutely right. That was the number that had a clear. It did. It's holding. Would I chase it? No. But if you get any kind of I'd say maybe a move somewhere between 302 and 303, that would give you a really tight risk to under yesterday's low. And I don't see any reason why, based on this formation, it couldn't go up to maybe 320. At this point, that would probably be a reasonable target based on some other resistance that we see. The big month where it crashed was back in 2016. That's really when IBB started having its issues. And the high of that particular month was 330. So I'd say somewhere between 320 and 330 is probably a good target if it holds here around this 300.
Anything else in the modern family that, maybe it hasn't taken off as much as the rest of the market in the modern family? And is there anything that maybe looks a little overdone?
Okay, well, IYT is also super important. I mean, you're talking about transportation here, which again, if you really want to measure the market space in reform that's been promised, like infrastructure, that's where you have to look besides IWM. I mean, IDB is on its own fumes. It crashed long before the market did in 2016.
Good point.
Now it's finally come back after the market is finally looking like maybe it's struggling here at the highs. So that's its own animal. But IYT, I got to say right now, that is trying so hard. It's got so much resistance. So if you start to see that hold these levels around 167, 168, turn back around and get a good close over 170, then I've got to say, whatever, this wasn't the top. I mean, by the way, I don't think that we're going to see a top that's just going to whimper out with, a few complacent buyers and a few bulls still out there. I think we're going to have some kind of a dramatic finish, and we have nowhere near that. In fact, complacency has been, I think, the biggest word that keeps coming to my mind when I see how the market's trading. And the last one I'd have to mention is granny retail, XRT, poor brick and mortar. I mean, you want to talk about something that hasn't come home to roost? I mean, yeah, obviously the switches to online shopping. You look at Amazon compared to, let's say JCPenney, just off the top of my head. It's laughable. But at the same time, is it really a joke? There are millions of jobs in the brick and mortar retail sector, which now, of course, is spilling out into the grocery stores with the buying of Whole Foods from Amazon. And you have to say down the road, what's going to happen to all these people? Where are they going to go for jobs? Is the government going to provide them a safety net? No. Are they going to provide them training for other types of career avenues? Most likely not. So I wonder when all of that starts to really impact the market. For now, though, it doesn't seem to be making too much of a difference, but I think that's short-sighted down the long term.
We've been on the line with Michelle Mee-Schneider. She's Director of Trading Education and Research for Market Gauge, finally joining us here on Benzinga's Pre-Market Prep. Thanks for stopping by, Mish. We'll have you on again soon.
Oh, thank you, Joel. Thank you, Dennis. You all have a great day.
Thanks,
All
Mitch.
right. S&P's battled all the way back to the close there. 37 and a quarter is your close. You were turned back here just on 3 15-minute bars at 37 even. So there you go. A big level going into the open here 8 minutes from now.
I was just looking at the Foot Locker and looking, the concerns here. So just a stat coming in. I'm not sure if this is correct. This is coming from Twitter. Mr. Connected is saying that 68% of Foot Locker sales are Nike products, and Dick's Sporting Goods, it's 55% of sales. So if Nike starts going directly to Amazon, does that, obviously impact Dick's and Foot Locker? Absolutely. So that's why you're seeing FL, and just on these rumors that they might be going full on Amazon, you're seeing Foot Locker down 3.5% here now, and you're seeing Dick's Sporting Goods trade down 3% there. So talk just quickly here about the Foot Locker chart here once again, because a month ago this stock was $75. Everybody, we were even saying on the show, I'm like this is was the one retailer that had just held on. It seemed to be like, for whatever reason, Amazon proof, and that's obviously not the case here now. It's funny how things change in 1 month. We've seen, and in this last month, Amazon has put, its impact on Costco and obviously through the Whole Foods, other stocks that we thought maybe were Amazon proof, not Amazon proof. Is anything really Amazon proof is the question. And then, jump into this Foot Locker chart, because this is just ugly.
I mean, how can you buy it? I mean, just the whoosh down after earnings. I mean, short term here, I can give you a level. The initial panic here was 47.37. But at this point, you're trading back at levels at in August of 2014, you had 47.50 as a low. So, there you go. There's a short-term, support area. But, I mean, you could have said that several times, along the way with Macy's, right, as it came down from 75. So, maybe after this news today, that area holds up. You have a double bottom area. Get a couple days of consolidation and maybe an inside day, but right now you're just really sticking your neck out on the line for going
and this
against
isn't
the major
even
trend.
And this isn't even official news. This is just, from a research report at Goldman, this is just a rumor here that, Nike might start selling here on Amazon. So that's, shows you just the influence here that stocks can get hit this hard. But, if that does happen, that doesn't come to fruition, it's going to impact the sales here probably at Foot Locker and at Dick's Sporting Goods. And some of the other retailers that we talked about this morning too, like HIBB is another sporting goods store, assuming they have probably a lot of Nike products in there as well. So brick and mortar, Michelle Schneider is just talking about it here. And here's another, example of, brick and mortar taking it on the chin.
And what about the implications she had for the jobs market?
It's scary.
Yeah.
I mean, everything is scary when you look at it from a jobs perspective, and not that we're an economic show, and I'm not an economist, but just using logic here. You've got, this whole, flight to automation. And automation is slowly eliminating jobs. I mean, we've seen it none greater in the financial industry. You look at the trading floor at the NYSE floor, and that is a pure example of what automation does to jobs. You had, hundreds, if not thousands of traders, on the NYSE floor just a decade ago. And now you're looking, and it's just basically tumbleweeds down there. It's a studio for CNBC because they got nothing to do. All automation is running the programs. I mean, your markets have become, automated. It's probably, of your quotes and stuff, high frequency trading might be 50%, but everybody else is using algorithms as well. Even non-high frequency traders, your institutions are using algorithms. They are cutting their trading desks. They just don't have the traders. So, it's definitely impacted that. But it's in all jobs. I mean, think about McDonald's, and you look at, their new automated tellers. So, you've got cashiers there that are going to be put out of business there. Maybe start in the banking industry when we got the automated tellers there. But now you just go to that McDonald's. You know what? I used it. I used it a few weeks ago when I went to McDonald's. I, placed my order. There was a little lineup at the queue, but then they have those, automated teller machines or whatever, the screens. And you just go in there and you type in your order. You know what? It was really easy. It was just really easy. I ordered within like a minute, and then boom, I didn't have to wait in line. So, there you go. I mean, it's a lot of jobs that are getting killed by automation. And now you start thinking, okay, well, everybody starts buying everything online. Now you got the brick and mortar the other way. I mean, there's a lot of issues here with jobs.
Yeah, a lot long-term implications, but looking more for short-term implications here. Diana Dawn is asking me about a target on AMD here. I'll give you your pre-market high, 1375. And then if you go back, Diana Dawn, this is kind of what I like to look at on my charts. You had three highs between 1363 and 1376. This was back at the at the end of April, after it came down off its high, which was they getting the 15 handle on that? No, looking on the monthly, what was the high of the move? High of the move was 1509. So to me, gapping up a buck, but man, look at the volume in that thing, Dennis. 5.5 million shares.
It's now like just in full, going crazy mode here, and a little bit of capitulation there. So I know every time this thing's popped over 13, it's failed to hold it. So am I coming in here now and buying 13? I mean, 4 days ago we're at 11. So you're chasing now. That's the definition. If you're in it long, congratulations. I wish I was. I'd be ringing the register if I was in it, just because that's what it's done in the last month and a half. It's went from 11 to 13, just under 13 in May a few times already. So you can say, okay, well, it didn't do it in May, but I believe in the pre-market it did. We obviously look at the pre-market too. So just because your intraday chart doesn't show it, sometimes it has traded higher than that as well. So I personally would be ringing the register at the 13 handle.
And I really like that pre-market high of 1375. Coinciding with the trio of highs there, right at that area. And if you really want to hold out, and if it gets you there, you got another gap fill up to 1410. So see what happens at 1375 if, in fact, we get back to that area. Dennis, got about another minute here.
I actually want to go back real quick, back to that jobs thing you guys were just saying. I saw this tweet from Carl Quintanilla this morning. He highlighted a note from Axios. They're a news organization. This really drives home the point. In 1990, the top three automakers in Detroit had among them revenues of $250 billion, and to go with that, 1.2 million employees. The top three companies in Silicon Valley in 2014 had the same amount of revenue and only 137,000 employees. So the same revenue, 1.2 million employees in 1990 among the automakers, 137,000 employees in Silicon Valley.
The companies are making the revenue with a lot less help.
Exactly.
And, it's all about the bottom line. I mean, everybody's focused on, especially public companies, on making money. And that's an issue for jobs. And it's an issue for the little guy because, if it's that efficient, as efficiency increases and automation helps efficiency, it's putting some people out of work.
Well, Gene Munster says, in his future perfect thesis that, in the future we're going to have more. Everyone's going to have more free time. The question is whether they're going to have the means to afford things in their free time because there's going to be so much more automation. And I would definitely encourage.
It's scary.
Oh yeah, for sure.
But it snowballs back too. I mean, if you have a lot of people who don't have jobs, they can't consume. So your GDP isn't going to continue to grow if you have people that are obviously don't have money to basic consumption of goods.
Right, and then think about your jobs that are quote unquote, immune from this sort of thing. Your plumbers, your electricians. Well, that only works if people can afford plumbers and electricians, right? So people can afford to do work on their house.
You don't think there's going to be like a robot coming in? I'm your neighborhood robot electrician here.
No, maybe I don't know. I have no idea.
Maybe stuff will just fix itself.
We better ramp up our servers because if more people are going to be out of work, more people are going to be listening to Benzinga's pre-market prep show. So we got to be prepared for that. And,
there'll probably be robots doing the pre-market prep show too in the future. So they'll be very monotone.
Yep, we're gonna replace everybody.
We are robots. Spinner 213. Have you guys seen the kiosk bartenders? Boy, I sure hope that doesn't happen. I mean, you rather have the bartender with the strong arm there than having the automated drinks.
Personality. The bartenders make the bars sometimes because they got all the personality.
All right.
Scary thoughts here this morning. Sorry to depress everyone.
It's okay. Scary thoughts to end the show. That's it as far as pre-market prep is concerned. But we're going to do the same thing we did yesterday, where Joel's going to hang out with us till about 9:15. He's going to talk through some tickers that you put in the chat and just give technical levels on the movers. But as far as pre-market prep goes, that's it for the show. Please remember you can find it on iTunes, SoundCloud, and Stitcher. Just subscribe to any of those platforms and get notified when the podcast goes up. You can also subscribe to us, our YouTube channel, Benzinga TV. Like us on Facebook. Follow us on Twitter. Don't forget about Benzinga Pro. Be the first to know. Trade faster, trade smarter with Benzinga Pro. Okay, 9:02 now. Dennis is going to go. I'm going to go, and we're going to let Joel kind of walk through some charts. Joel, have at it.
Okay, first here, looking at the S&P futures. Now, we have come all the way back from that 24.2875 low. We hit that just around 5 o'clock this morning, actually on the 4:30 bracket. And now we're coming back to unchanged on the session here, trying to go green. Not much if we could clear this level. Above that, I have your daily pivot at 24.41. So keep an eye on that as another potential target on the upside here. My first ticker request actually comes from Dennis here. Oh, no, wrong window. He probably doesn't want me to mention that stock. All right, moving on here. NGG. All right, let's take a look at this one. This is coming from Fuzzy. All right, NGG. The stock has been hit, trading down in the pre-market. First, looking up here on the upside. Boom, boom. Let me see. I see major resistance here at the $66 area. You've had your last three highs between 65.81 and 66.02. So major resistance at the $66 area. Coming back on the downside here. The low of the move, you got to hope that holds up at 64.42. You could also just be a little bit more patient here and wait to see. We've been really in a 5-day, 5-day trading range between 64.75 and 66. So trying to consolidate here, a move above 66, and this could be ready to go and to the upside. DC1, talking about MO, Philip Morris. And take a look at this stock. What a rally. This has come back.
MO is Altria. MO is Altria.
Okay, Altria, right. I'm sorry. Altria Group. Thank you, Spencer. Let's see if there's an institutional seller that was out there the last 2 days at 77.78. It's 78.79, just ahead of the $78 level here. So starting to form a topping formation. You want to see this bust over 78, hold the close over 78. Also, the all-time closing high on this was on Monday at 77.71. On the downside, you are trading here currently at 77.30. I'd be a little bit concerned for more downside action if you took out 77.20. That was a low for yesterday. So you almost have matching ranges from the last two sessions, but a lower close here. So could see some potential profit taking here in Philip Morris. Altria Group, Spencer. It's had a very, very nice run as of late. Looking for some more tickers here out of the chat. Before we get that, want to take a look. We mentioned GE here. In order to fill the gap in GE, you need to get down to, let's see what you got. In order to get a gap fill in GE, you need to get down to 28.73. That was the area that you had the nice gap up for. 27.73. I'm sorry. We're getting a request here from UAA here. Take a look at this. I kind of like to look at UA, which is the other symbol for Under Armour. And what a streaky stock this is. When the NBA Finals started, you had an 8-day rally that took the issue from the mid $17 handle all the way up to 21.81, and I believe that was the day following the conclusion of the NBA Finals. And now you're in the midst of a 5-day losing streak. So also bad news on some of these other retailers here. I'd be maybe holding out for the 1850 area to look for support. 3 lows on June 2nd, 5th, and 6th from 1844 to 1854. So if you are holding out for a target on the downside in UA, 1850 could be an area. Dennis wants us to take a look at Square SQ. This thing, I know it got downgraded the other day. I'm not sure who did it, but this chart looks good to me. Ran up, made an all-time high, pulled back, found support, trading up 15 cents in the pre-market. Yesterday's high, 24.46. We'll keep an eye on that as the target. And then above that, the all-time high comes in at 24.83. So this one looks to be on the comeback trail. Spencer wants to ask about GoPro. Before I go to GoPro, I just want to mention Fitbit here yesterday. Came out with the good news of the NBA contract with the Minnesota Timberwolves I think it's on their jerseys, and that thing went down on supposedly good news. Made an all-time low a few days ago, $4.98. Someone predicting the $5 level. Actually, all-time low is $4.99. 2 lows at $5. Now, one thing you want to keep in mind, it's not a hard, fast rule, but a lot of times when stocks break under $5, institutions, don't want to have it on their books, and they could be a big exit, but trying to hold in there. And a good example of that was J.C. Penney a few weeks ago. It had the bad report, got down under 5, and looked like had one spike over 5 to 520, but has not been able to get back over that level. GoPro, another perennial underperformer here. Just not sure if there's any news on it. Got off the mat yesterday. From a technical perspective, you do, after making a new low of the move here at 757, you do have 2 higher lows. So see if that trend does continue. You have a step up buyer. $8, $7.99 was yesterday's high, but you got another 3-day high at 806. So doesn't look like a lot of trading action going in GoPro. CMSCA Comcast. I saw that. I think it got hit yesterday, correct? Yeah, had a gap down yesterday. Not sure what the news was. Trading down 24 cents here. I don't want to see this thing take out the $40 area, $39.92. That was your low from yesterday. Also, you had a low right in that area at 40.21. So I don't like it. I don't like this thing, especially if it breaks under $40. Let's just take a look here at some of the top components in the S&P 500 index. And let's just take a quick look at Apple before we move on here. Big resistance forming in Apple after the Tech Rec Friday. You had a double top at the 147.50 area. Came up shy yesterday, so major resistance at 147.50 in Apple. And you gotta love the major support at the 142 area, just above that. Double bottom 42.21 and 42.20. And then on Tech Rec Day, the low was just above that at 42.51. I had to bring up stocks that Dennis had some regret in. I had those Kroger puts. Let's see if Kroger can mount a rally here. Wow. 2 quiet days after the Amazon debacle. Let's see the ranges from the last 2 days. 2 lows here at 22.20 and 22.25. So buyers are stepping up here. So definitely would try it in that area if it got back down to it, perhaps with a stop under 22. And man, people are still stuck in this thing. 22.97 was the high from Monday, but in order to fill the gap from the Amazon Whole Foods deal, you got to get all the way up to 24.37. Spencer wants to ask about the House of Mouse here. Had that nice run up to 117, but has been in the doghouse ever since. Took out double bottom at the 104 yesterday, 104 area, went to 103.81, closed at 394. So maybe you get a quick pop off this area, but if you don't want, if you're trying to play this with a tight risk reward ratio, think under 103.81. You got to clear it out. Don't see anything on the monthlies till 98.25. But $100 could always be a psychological level. Not a good sign, though, that it's not being able to distance itself from that 104 area. And let's see here. Let's AUPH from Echograph. Let's take a look at that. AUPH. Nice run yesterday. This would be a candidate for a 2-day move for Dennis. Arena Pharmaceuticals, yesterday's high. I like it. It had the little update bar yesterday, the nice update bar yesterday. Let's clear 6.7. Well, we already did clear 6.77 because we're trading up at 16.89. So even if you're lifting the offer here, getting in, you got down to yesterday's close of 6.73 as a support potential stop out area. A lot of congestion above $7, but looking at the 2-day move here, boom. Let's see if it can get above $7. And Spencer's hopping in with Baba here with Jack Ma in the Motor City. One easier to find support in this thing, 135. That was had held up. Did get a sneak low down to 133.55, but quickly rebounded. Double top to contend with here, 140.40 and 140.63, and still waiting for the analysts to come out on this one after they came up with those much higher revenue projections. Really haven't seen any target raises yet on the price. And Terry wants to know if the SOX has run out of steam here. That's a very good question. Hit that high at 155. We pull back 150. Let's get back above 150. Well, we're trading quite a bit below that at 146.60. So look at the 149.50 to 150 area. I think if you can't get back over that over the next few days, and you take out the tech rec, now it wasn't tech rec low, it was the day before at 142.81, you can see some more continued downside. All right, folks. Well, thanks for sticking around for the extra 15 minutes. Hope we've provided you with some good information. Keep an eye on that close there in the S&Ps at 2437.50. Need to stay green to get back up into that 2440 handle. Have a great trading day. We'll be back with you tomorrow morning.